Hello everybody, Andy from ASAP Trading here, and today we're gonna take a big hard look at the chart that knows literally everything. That is the US dollar currency index chart, the DXY ticker. We are living in a world where everything is priced in dollars, so when this chart goes up, everything goes down, and vice versa. So let's get right into it. On the left side, we can clearly see a downtrend from early 2000s to a 2008 low. That was the GFC, followed by a big accumulation zone represented by a narrowing range. Everything goes under this rectangle, and this rectangle acts as a resistance, giving a reaction here, here, and here as well. For the third time, we penetrated it and established a big uptrend. After the penetration of this resistance zone here, we established a back and forth trading range right above it, and I like to interpret that as a diamond. The diamond was penetrated to the downside after the March 2020 crazy volatile price action in the dollar index. So this created a move downwards within this channel that looks pretty parallel. I've got another interpretation here on the daily chart that represent the price action prior to the March 2021 like a narrowing channel to the downside, which is also named as a falling edge. Ultimately, we penetrated this falling wedge here after an fail to penetrate it here, and after a repeat of the similar price action down here. So what does that really give us? Here we have a middle line of this parallel channel that acts as support when the price is above it, and the resistance when the price is below it. After penetrating this wedge on a daily here, we was trending to the upside, clearly forming another narrowing channel to the upside. Ultimately, that was penetrated to the downside within another wedge, and that wedge got penetrated to the upside, and this gives us the present day picture. So what does that really give us? This is the chart of the largest USD bullish ETF traded up there, and I like to look at my indicators on this chart. Specifically, we will take a close look at this zone. This zone represents a price action that is similar to a head and shoulders, an inverted one with a downward sloping neckline. That's worth mentioning that this kind of pattern is highly unreliable, at least is considered so. But take a look at this. The indicators show us a big spike in volume down here, and the MACD prints a divergence in this zone. As the price prints lower highs, the MACD prints higher highs, and if we get a crossover here, that would give us a fresh divergence with this low, and that will be a crossover near the zero line. So the crossing of the zero line will follow after. That's three most powerful MACD signals combined together in one simple move. The divergence, which is a double one right here, the crossing of the zero line, and the crossover of the moving averages all together, all at once. So this is why this kind of price action, it's worth to be tried, to be traded. So the first way to benefit from the uptrend on the DXY chart is to trade this ETF, to take a long position with a short at or below 24.09. That's the local low here, because when you trade a head and shoulders pattern, is the best. The risk reward is achieved when you are opening a position at the forming of the last shoulder with a stop loss under the head and shoulders head, and that gives you a huge risk reward. Even if we was going to go to the 25.19 region or somewhere up there, you are risking only 0.15 cents per each share of this fund. So that gives you an excellent risk reward ratio, and the possibility of a reversal here is very high. So that was everything for this video. Make sure you take advantage of the potential uptrend forming right here in front of us on the dollar index. And in the next videos, I will try to outline a few other possibilities how you can benefit from these upcoming events in different ways. Thanks for watching.